Hey guys, welcome back to the channel McNally Money, the official home of power mining analysis. In today's episode, Anthony Power and I are going to be taking a deep dive look into the CoreWeave Core Scientific transaction, talking about the details on both sides of the equation and the impending or upcoming vote deadline. Before we get into it, take a second, hit the like button, you guys. Big help to myself and the channel. If you're not already subscribed, McNally Money, feel free to join. And let us know in the comment section below if you're currently holding shares of either CoreWeave or Core Scientific and whether or not you support this deal. With that being said, let's get into today's video. All right, guys, away we go. Thursday morning here, a very interesting day in the market. We're going to talk about Bitcoin price, the miners. Obviously, we've got a great deep dive in store for you in terms of the Core Scientific CoreWeave deal. But before we get into all of that, a major milestone on the agenda tonight. Iron earnings. Now, we've got Daniel Roberts, the co-CEO, on the channel tomorrow. That's going to be at 4:30 p.m. Mountain Time, so the interview won't come out till tomorrow night. We're also going to be featuring Iron in our newsletter this week. So Iron, obviously the retail darling right now, and looking very forward to the next 24 hours with Daniel and team.
Yeah, I was looking forward to that. It was a really good podcast last time on there. As you rightly say, one of our best performing podcasts this year. Lots of interest in Iron. Iron, to be honest, if you ask any of the mining execs out there who they see as the star performer at the moment from all aspects, that they're probably going to turn around and see Iron. I managed to bump into a few today, and they were really complimentary to the team at Iron and what they've achieved over the last sort of 12 to 18 months with that enormous growth in hash rate, and also pursuing and executing that HPC strategy at Prince George.
Yeah, you're certainly right. We had the team from DMG Blockchain on yesterday. This is a smaller, lesser known Canadian miner. They have a very interesting site also in British Columbia, Christina Lake. Similar size, megawatts, footprint to what we see in Prince George. So that's definitely worth a watch as well. Now, kicking things off, Bitcoin starting to show a little bit of strength, now hovering just shy of 113,000.
Yeah, I was at the Bitcoin Asia conference today, and they had a big screen there with the live Bitcoin price. And during mid morning, it got above 113,000, 113,300. I saw it as high as that, and it's just pulled back to just below 113,000 at the moment. So plenty of nice movement up today, coming back from that 108,000 we saw earlier in the week, and the mining stocks predominantly look green today as well.
Yeah, they certainly do. We just mentioned how excited we are for Iron earnings. It looks like the market in general is fairly excited for Iron earnings. You made a good point as well. They obviously came out with that big GPU purchase announcement earlier in the week. I would suspect they wouldn't have shown all their cards yet, and we may be in store for another big announcement or something on the earnings call. But Iron off to the races today, and as you say, most of the miners actually following suit.
Yeah. Iron already went through $24.29, which is a 12-month high today. Still about nearly $4 short of their IPO price of $28. But bear in mind, since that date there, they've issued a lot more shares. They're a lot more valuable. They're at $5.7 billion at the moment. And when you look at Mara, they're at 5.97, so there's literally a couple of $100 million between the two top mining companies at the moment. And it's clear to see that there's lots of anticipation of the earnings coming out today. You're quite right. The precursor to this was that news update about the GPU purchases going into Prince George. We expect to hear a couple of other good nuggets today in the earnings, and then lo and behold, 24 hours later, we've got Dan on the podcast, and really looking forward to that one there, because I'm sure, it'll be another great podcast like we had last time. Really looking forward to it.
Yeah, it should be great. And again, you guys sign up for the newsletter on the Power Mining Analysis website featuring Iron in this week's edition, which comes out tomorrow. Now, getting into some of the specific stocks here, CoreWeave also making a nice little move today. At the time this was taken, up about 7%, so actually above $100. And that's a perfect segue into the main event today, which is going to be this deep dive analysis into the CoreWeave Core Scientific transaction and trying to understand who really ultimately wins in this proposed M&A activity. We're going to be going through a few key points that were just disclosed this week, actually, in CoreWeave's S4 statement. So, with that being said, we wanted to set the stage here a little bit. It's been an interesting few months or few quarters, to say the least. If we look back over the past 6 months for both CoreWeave and Core Scientific, the charts really do tell an interesting story.
Yeah, they really do. And obviously, we've talked a lot about the CoreWeave deal with Core Scientific and the impact that had on the Core Scientific share price as each effectively new contract was agreed, taking it all the way up to that sort of like 590 megawatts. The share price actually in early July reached over $18 a share. And at that point in time, there was these rumors about a potential bid for the company, which really got the interest of a lot of the core scientific shareholders.
Yeah, it certainly did. Now, on the CoreWeave side of things, we've talked about some of these key developments as well. They just IPO'd this year, so this was a private company. About 83% of shares were held by pre-IPO early investors. That lockup period just ended in unison with their Q2 earnings and the S4 filing that we're going to talk about today. But this chart as well, a lot of action, a lot of volatility, and really since the announcement of this deal, a lot of downward pressure.
Yeah, I mean, the IPO price was $40. We saw the share price soar all the way up to over $180. And then we've seen that sort of really come back down to, as we see today, literally just over $100. Now, bear in mind, we are talking about a company that literally IPO'd 6 months ago. The lockup period has just happened, so all those shareholders, the pre-IPO shareholders, were in a lockup position there. Now that's been removed, and we've seen a bit of selling. But actually, I think people may be expecting there was going to be more selling. Now, what you can remember is CoreWeave, they're a company that's valued probably over $50 billion at the moment. But when you look at the likes of some of the big hyperscalers out there in the $1 trillion market like that, and you look at where CoreWeave could be in 2 to 3 years' time, this share price might be just a blip compared to where it could be.
Yeah, it certainly could. Now, we wanted to bring up your comparative table here before we get into the new information that's been disclosed. This gives a good point of reference as it stands now, based on the current deal in its current form, what you could expect to receive.
Yeah, so this is from the 7th of July, which was announced on the 7th of July. So all this information is out in the public domain. We've been using this chart because it highlights what the original deal meant on that particular day. It was a $9 billion deal implied based on the CoreWeave share price of $165.18. That gave the Core Scientific effective share price of $20.40. So a nice premium to what the Core Scientific share price was in the preceding month to this build-up of this deal. And the only downside to the deal itself at the time was the fact that there was no lock to that CoreWeave share price. And bear in mind, if the CoreWeave share price changes higher or lower, the impact of the actual deal change as well. And if we take a look at today, the snapshot today, where the CoreWeave share price is $103.60, that implies the deal is no longer at $9 billion, more like $5.64 billion. So significantly less. And again, from a Core Scientific perspective, your shares aren't worth $20.40 today. They're worth closer to $12.79, which is actually nearly $2 than today's share price. So it looks like the market perceives there's a little bit more to come from this in terms of, by the time the announcement will happen, which is planned to happen in Q4, so maybe another 2 to 3 months away from today, there could be more movement higher in CoreWeave and Core Scientific share price. It's not a done deal as today. It needs to be voted in, and that could be another 3 to 4 months away from where we are now. So that's the sort of like the crux of what we know what we knew before this week.
Yeah, it certainly is. And you can see the volatility. You almost need to add a few more lines in the 80s and 90s on that table. Now, this is where it gets really interesting. So, again, CoreWeave just came out with their Q2 earnings. Along with that, they submitted their S4 into the SEC. This is a massive document, hundreds of pages. You've taken the time to comb through that, Anthony, and we picked up on really four key areas that we wanted to discuss or talk about in today's podcast. So before we do, and to save you guys hours of reading, Anthony, you've kindly actually gone in and put a timeline in based on this new information available in this SEC document. So we won't go through each and every date, but maybe you can walk us through some of the key developments because a lot of people in the space aren't necessarily familiar with how closely these companies have been intertwined really for the past 6 years.
Yeah, these companies have been together, working together in various aspects since 2019, when Core Scientific actually hosted CoreWeave for their GPUs when they were mining Ethereum. And then if you fast forward that to 2024, February 2024, they agreed a contract for 16 megawatts at the Austin facility in Texas. So that's the first high performance compute deal with CoreWeave back in February, and then roll forward then to June when me and you were very fortunate to be invited down to the Denton facility, now known as the flagship HPC facility for Core Scientific, and be there for the announcement of this additional 200 megawatt deal. And during that conversation, the presentation there were suggestions that this was likely to increase. And then we saw over the course of another 4 or 5 months, more and more of these agreements coming to the table where we totaled 590 megawatts supporting that deal with CoreWeave. So we've seen other miners get extensions to the deals that they've had, but this was a significant increase, and 5 or 6 increase to the original deal, getting to that 590. We then obviously we knew from the 7th of July there was an offer put out there, which the directors, after due diligence, decided to accept, and then obviously the Form S4 came out this week, which told us a little bit more information about what happened prior. So what we didn't know was on June the 6th, CoreWeave submitted another proposal. Bear in mind, back in June 2024, they actually tried to buy Core Scientific for $5.75, a total of $1 billion. That was very quickly rejected a couple of days later. And at the same time, we then knew the announcement for the 200 megawatts deal was in place there. So the second time they made an offer was on June the 6th. That was at $15 a share. So now that's increased nearly 200%. And the Core Scientific board actually brought in some advisors to help them do some due diligence and show CoreWeave actually they're worth more than the $15. And then you fast forward to what we did know is actually the deal on the table that the directors have agreed to. And they've agreed to effectively an exchange ratio of shares. So for every 1 share of Core Scientific, you receive 0.1235 shares of CoreWeave, which basically implied that $20.40 a share. And with the board agreeing it, they've then obviously now got to do the process of making sure that all the documentation goes out to shareholders, and then the shareholders have the final say on the deal. And as we said earlier in the podcast, that's likely to happen in the next 3 to 4 months.
Yeah, that's great, and appreciate you putting this together. So if we now fast forward, look at the deal in totality, as you just mentioned, 590 megawatts, over $10 billion. We can talk about some of these other key stats, but you can see on this timeline the evolution of this deal. They made a bid at $5.75. That was rejected. They then came in, made a step-up bid from there. That ultimately wasn't brought forward. Now this is essentially the third iteration and continuing to add more money to the pot as the Core Scientific story really evolves. And that's really the genesis of today's discussion. What did Core Scientific have before the deal? What do they have now? And what is the outlook for shareholders? So if we take a look at the totality of the deal here, Anthony, we mentioned throughout last year, this deal really cemented the entire industry and really got people thinking about Bitcoin miners as HPC data center players.
Absolutely. And we can't reiterate enough, this was a very, very good deal. We've seen subsequent deals come out with a number of other providers like TeraWulf have got now 2 deals. We've seen the likes of Applied Digital have a deal with CoreWeave, and the likes of Galaxy Digital also have a deal with CoreWeave. Them deals aren't as good as this initial deal here. This was probably the best deal at the time of the market. That 10 billion over the next 12 years with 2 5-year options to extend. So potentially nearly a $20 billion deal over the next 22 years. That's a significant amount there. So from Core Scientific's perspective and the Shell's perspective, that was a great opportunity to drive that and still have some power available to deliver another 400 megawatts to a potential second client. So that was the thought process that we led to understand before the offer came through on the 7th of July.
Yeah, it certainly was. Now, another key piece here that we were led to understand prior to this announcement was the actual portfolio within Core Scientific. So we've got 2 slides here. Interesting to compare the two. One is from the Core Scientific deck. You can see 1.3 gigawatts worth of sites spread all across the United States. The second one is from the CoreWeave deck. They use the same visual, but all of a sudden there's now an additional gigawatt within this pipeline. So this is essentially the first topic of discussion here is what is the portfolio that Core Scientific has under the hood, and why was this additional gigawatt maybe not mentioned or left out of their deck originally?
Yeah, I mean, it's quite, this is what we've been discussing on the podcast. This was the original slide that showed all the sites there. This is for Bitcoin mining and for high performance compute. The Denton facility we went to, that was a 150 megawatt Bitcoin mining site when we went there. Look at it now, it's a 394 megawatt site going to be delivering high performance compute. And so, again, this talks back to the conversations that we've had with BitDin saying that, is big better? Of course, big is better. And Core Scientific had those big sites that they could utilize for HPC. And we see another number of other miners go down that route as well. But this is all that was available up until very recently.
Yeah, it certainly was. And you can clearly see on the CoreWeave side of things, they state 2 gigawatts plus of gross power. So we have often talked about the Bitcoin miners not being properly valued on their HODL, on their mining equipment, on their facilities, on their HPC contracts. We made a strong case for Core Scientific that they were essentially being given no value for their Bitcoin mining. Now we find out about this additional gigawatt also has to play into the valuation equation at some point. So that's the first topic. Again, we would love your guys' comments in the section below. What do you think this additional gigawatt really does for each company? The second area that we wanted to bring up is more to do with the financial construct of the deal. Now, our good friend Penny Ether has actually done a nice little ChatGPT or AI summary of this S4 document, and it does a good job of laying out some of the more financial driven concerns from the shareholder base. Now, you can see listed there in point form some of the points around the lack of a collar, the no base, no ceiling, the floating exchange rate. So that was going to be the next topic of discussion here in terms of how the deal was constructed itself.
Yeah, and it's obviously clear when they announced on the 7th that there were elements missing to protect shareholders in terms of having that collar and having alternatives like floating exchange rates, exchange ratio collar, fixed value structures, all these types of uses, all these types of structure that can benefit, all these types of structures that can mitigate any risk to the shareholders. And, it's obvious in that period from the 6th of June to the 7th of July that Core Scientific senior team were around the table trying to deliver a better deal all round. But as you can see, with the outcome of the deal, they weren't able to get everything they wanted in that deal there. And part of it now is coming out in the S4 document, the perception from CoreWeave, how they saw the deal. And it looks like, they could see a number of issues in terms of the types of risk that they were witnessing in potentially delivering some of the aspects of the actual contract. Financial risk, would they be able to raise sufficient capital to deliver all the refurbishments in the time frame that was agreed in the contract? And then also execution risk as well, which pretty much go hand in hand. So if you can't raise the finance, are you going to be able to complete all aspects of the contract? They were highlighting this as two potential big areas. The other thing they also said to Core Scientific, there was no other potential company coming in to support Core Scientific deliver this. And so from CoreWeave's perspective, and if you read the document, I mean, Penny Heath has summarized it in a very, very, very simplistic way here, but there's probably about 100 to 150 pages that really talk about all aspects of what happened all the way from the 6th of June all the way to today's date. And, if you've got a half an hour, it's well worth having a read. I had a lot of read through yesterday to cover some of the areas that we're talking podcast today. And it does, open your eyes a little bit to what was going on there. And, you've got the David and Goliath effectively. You've got the company there, CoreWeave, valued at over $50 billion and Core Scientific valued at just over $4 billion, trying to, hang on to this contract, hang on to this great deal, and CoreWeave not really giving them any motion at all to move further away. They did manage to get a better exchange in terms of what they're offered on the 6th of June. But the fact is now, as we've already articulated, if that CoreWeave share price doesn't get back to the $165, it effectively means that Core Scientific shareholders aren't getting as good a deal that was on the table when it was originally offered.
Well, you're exactly right. And for those of you who are unfamiliar, a collar or a limit is essentially insurance for the shareholders, saying the price won't go above or below. There can be bottoms or tops, but in this case, there was no collar whatsoever, and it's truly up to the market to determine what that price will be. Now, the addition of a collar obviously adds more certainty, so there would be some negotiation on price, but in a lot of times or a lot of situations, you will see this used by companies. The other interesting component here, you mentioned how good of a deal this was for Core Scientific. CoreWeave was actually going to be financing a lot of the upfront build cost, Core Scientific paying that back in iterations. So it's interesting to see perhaps they were running into some financial or execution risks that we weren't aware of. Based on the website, the presentation, you can see continuing to upgrade or convert the Denton facility. We were under the impression everything was on track. Revenue was already flowing. However, again, under the surface, now that we have more information, maybe this wasn't exactly what meets the eye. A lot of new information coming to a head here and really posing the question, who ultimately wins in this proposed transaction?
Yeah, absolutely. And one area that we haven't covered is obviously the financial obligations that some of the senior management team of Core Scientific, including the CEO and the CFO and the senior legal advisor to the company, they're actually quoted in the Form S4 document as to the likely total benefits they'll receive should the deal be passed through. And it's certainly some eye-watering amounts there. I mean, Adam Sullivan's been the CEO now for coming up to 2 years. He took over during that period in Chapter 11. He's done a fantastic job. No one can actually disagree with that there. They came out of Chapter 11. They repaid the debt to all creditors. And, they've got the company literally within 6 months of coming out of Chapter 11, starting to have some significant deals delivering high performance compute. So no one can agree with that. So if we look at Adam Sullivan, the CEO's, his salary is $825,000. Now, the table clearly says he'll get 2 times his salary. That takes it to $1.65 million. He gets 2 times his bonus, which is a further $2,062,500. And then he also gets the 2025 bonus, which is just over $1 million. That takes his total cash payment to $4.7 million. Now that's a handy sum there, based on the fact that his salary is $825,000 a year. Then we look at the equity awards. Now we know that Adam has received a number of shares, and I think it's probably close to 3 to 4 million shares. Whilst he's been the CEO there, obviously he was on some probably performance-related bonuses in shares for achieving certain things, and no one can really argue the fact that he's done a great job. But the equity awards themselves are effectively broken down into two types. You've got the RSU awards, which are time constrained, and you've got the PSU awards, which are more about achieving certain performance over the period there. So, but it's when you start looking at the sheer size of these awards, and we have been sort of like, scratching our heads at some of the sort of compensation packages that we're not just seeing from the likes of Core Scientific, but from literally all the miners now. We did some analysis maybe about 18 months ago, comparing them to sort of like the compensation packages of some of the big seven companies in the world. And believe you me, you think some of the miners CEOs were working for those top seven companies when you look at the compensation package they're receiving now. Well, in Adam's case here, his total package, including equity awards and that cash settlement, and receiving some medical benefits for the next 2 years, that's another $25,000. And the fact that if there are any tax issues with regards to these awards, CoreWeave will also cover that, and that's another $25 million. His total package is $131,900,000. That's a significant amount. James Nygaard, the CFO, he only arrived in March. He was brought in March, and literally within the first 2 months of his arrival, he's obviously now been part of the conversations for these deals with CoreWeave. He's going to walk away with not as many performance awards, because he hasn't been there long enough to really show what his performance has been like. So he just gets the initial RSU awards, which were probably granted on him becoming the CFO of the company. You tend to, when you bring in senior team members, you're going to issue them shares to make sure that they stay the course, make sure their objectives are aligned with the company's. And so his potential package, should the deal go through, is around about $16 million. And then you've got Todd DeChain, who's the senior legal member of the company, and his package, including the cash payment, the equity awards, the benefits, and the tax reimbursement, should that be required, totaling $43.7 million. This is some mind-blowing numbers when you consider effectively, they're in Chapter 11 literally 18 months ago. And, now we're 18 months later, and there's a deal been agreed in principle. Now the shareholders have to vote. So I suppose, the bottom line to all this discussion today is who really wins in the deal.
Yeah, it's a great question, and we're not here to answer that one for anyone, but there definitely are some questions in our mind. You can see, based on the share price of Core Scientific today, the market feels there is some potential for maybe some additions to the deal as well. But at the end of the day, time will tell if the shareholders vote this one through. We're just glad we got some more insight and information via this document. So with that being said, the next topic, Hive Digital Technologies. We just had the team on, Frank and Aiden, a great podcast talking about their growth, expansion in Paraguay, South America, and of course, Buzz HPC. It appears again, Wall Street has taken notice of this. Ken Griffin, a notable Wall Street player, buys 5.4% of Hive Digital Technologies. And I got to say, Anthony, I looked through the article. They used our thumbnail in the actual press release as well. So great to see the Power Mining logo there, and also great to see that the investor bank folk are watching the channel.
No, it's another obviously tick in the box for Hive. I mean, Ken Griffin founded Citadel back in 1990. He's well known throughout the investment banking arena, and making that sizable purchase in Hive. He obviously sees what we've been discussing over these last 18 months, how this company now is starting to do exactly what the retail shareholders were hoping for, is start to grow that hash rate. I mean, they've achieved 16 exahash as we speak now. They're going to 25 by Thanksgiving. Thanksgiving is the last week in November. So we'll be getting updates on a pretty much weekly basis between now and then for every exahash they increase to. And they've been managing to do that. Remember, the start of the year, they were 6 exahash, now the 16, going to 25. We're talking about increases there aligned with the likes of Iron and CleanSpark in the last couple of years. So Hive are going to get a notable rise in hash rate, which should start seeing them deliver around about 12 Bitcoin a day. And their efficiency of the mining machines will start to come down to about 17 joules a terahash. They'll also be able to reduce their blended power cost, because Paraguay is significantly lower power cost than their other sites in Canada and in Sweden. So we're going to see some the blended power costs come down. That gives them a better margin. I think they were talking margins would be well over 50%, which is great to see. And that's at the Bitcoin price where it is at the moment. Bitcoin price rises, the margins will probably increase as well. But this is a great deal for Hive, a great deal for Ken Griffin as well. And if you're shareholders of Hive out there, they've had a fantastic run over the last month. I think they've been up about 50% in terms of the last 3 to 4 weeks. So if he's got in at the right time there, he's already sitting on a sizable gain from that massive transaction.
Yeah, great to see that kind of interest in the space. And obviously, congratulations to the team at Hive. We talk about execution and execution risk, and they are firing on all cylinders right now. Good segue to the final slide here as well, as we talk about margin, the impact of Bitcoin price on the miners, hash rate index. Again, not a ton of movement in terms of hash price itself. We do have a difficulty adjustment scheduled for next week. Unfortunately, it looks like it's going up another few percent, not giving a lot of breathing room to the miners right now.
Yeah, I mean that increase there is obviously blocks are getting mined quicker, 9 minutes 31 seconds for each block. The key number on here is the actual 7-day moving average for the global hash rate, 974. That's getting towards the highest I've seen. We have seen it go above over 1,000 exahash, but it tends to be volatile. When you're getting a 7-day moving average of 974, that's considerably higher. I mean, I think last time we showed this chart, it was in the 930 range. So it's increased again by a few more percentage points to get up there. And that's going to make an impact to the difficulty, already suggesting a 5% increase to get those block times back up to 10. Make it harder for the miners to achieve the block, get it back to 10 minutes. That means it's going to affect production. So effectively all the public miners will start mining slightly less Bitcoin. And we just don't want to underestimate the actual impact of difficulty. We've talked about Bitcoin mining halvings every 4 years. The difficulty is another halving effectively. They're doing 2 halvings every 4 years at the moment.
Yeah, they certainly are. And that's exactly why so many miners, including CleanSpark now, are starting to look at HPC and AI. So that's it for today's podcast. Let us know in the comment section below who you think is the ultimate winner of the proposed CoreWeave Core Scientific transaction. Again, Iron earnings tonight, Iron newsletter feature coming out tomorrow, and Iron podcast with Daniel Roberts tomorrow evening. We're recording around 5 p.m., so it'll be out shortly after that. That's all for now. Thanks so much for watching. Have a great rest of your day.